What's up, YouTube? It's Andrew here. I'm pretty sure in recession, but JPal's lying to us. I guess in a year or so, we'll see if the house of cards have fallen. Today, we're going to talk about the best sectors to invest in during an inflationary period. Make sure you stick around to the end of the video to see the best sectors to invest in my opinion. For legal reasons, this is educational content and does not constitute an investment advice. Welcome back to my channel where we talk all things money and investing. Today, we're diving into a topic that is intriguing and also a great time to talk about it: investing during a recession. Don't forget, if you enjoy the content and appreciate all the hard work I put into these videos, hit the subscribe button and leave a like. It helps for the algorithm. First on our list are consumer goods. These companies provide essential goods and services and tend to weather the storm better than most. Consumer goods may not sound thrilling, but people still need toothpaste, right? Discount retailers. In tough times, people become value conscious. Economic downturns can lead to increasing competition. Choose companies with a strong competitive edge. Typically, the company has been around the longest and has the best track record is the safest bet. Companies like Costco, BJ's, and Walmart tend to do very well. People need to eat even though times are tough. In times of recession, inferior goods do very well. Grocery giants also sell a lot of inferior goods. During inflationary periods, you want to invest into a company that is already producing a profit. This is because if you take a gamble on growth stocks, then they might not grow. As stupid as that may sound. Most growth companies or tech companies aren't producing a profit and are gambling on the fact that in the future they will turn a profit. However, growth companies, they are usually starting out or developing a product or doing R&D, and you have to take out debt to finance that R&D. Since interest rates are going up, it's costing more to fund these projects. That's why you want to invest into a business that already has cash flow and already has solid investments on their balance sheets and long-term contracts, whether that's with companies or whatnot. So it's always best to invest in these type of companies. Even though interest rates are going up and then any debt that they're taking on, they would pass it on to the consumer because they have a proven product. So in a way, if you're investing in the right company, it would be inflationary proof because even though their bottom line went up, their earnings are also going up by the same amount. Similar to needing to eat, recession or not, you need to use electricity or water. Great stocks to pick are General Electric and the Exelon stock. Utilities outperformed the greater market back when we had a recession in 2001 and 2007 to 2009. Utilities also performed pretty well in 2022 despite recession concerns. Even though higher interest rates and inflation hurt every business, these companies have steady cash flow and long-term contracts. Some general information for recession-proof stocks. Securities believed to be recession-proof often have negative beta values, which indicates an inverse relationship to the market. When the market goes down, the stock goes up, and vice versa. For those who don't know, beta is a measure of stock's volatility in relationship to the greater market. Betas typically range from -1 to 1. -1 meaning there's an inverse relationship between the stock and the market. 0 meaning the stocks don't move with the broader market. And 1 meaning the stock has a direct correlation with the overall market. A stock is more volatile than the market if its beta is more than 1. For example, if the market has a return of 20%, a stock with a beta of 3 will return 60%. It is once believed that gold and gold stocks, for example, were recession-proof due to gold's negative beta value. Physical gold has performed very well in some economic downturns, but this generally occurs under specific circumstances such as expected high inflation. Other general information to consider when picking a stock is to pick a stock with a reputable history. Me personally, I like to go back to the last recession and see if the stock held well or if they're consistently paying off their dividends. Speaking of dividends, this segues us to our next recession-proof stocks. Dividends, a source of joy for the long-term investor. Companies that pay consistent dividends can prove to be a reliable stream of income no matter the state of the economy. People that chase short-term gains struggle in a recession, but the long-term investor gets a fixed return, which is dividend percentage, on their investments. The seasoned investor usually picks blue chip stocks with a great track record. However, though, if inflation rates are high, this strategy will lose you money because the dividends will not perform as well as inflation. Well, not money, but inflation hurts your purchasing power, not the nominal amounts. You definitely feel more homeless. Try to invest in stocks that have a reputable dividend history for at least 25 years. This is because in tough times, companies tend to discontinue their dividends. Reputable dividend company rates usually hover around 3%. Unfortunately, this will definitely lose to 2022's annual 8% inflation. Remember, past performance is not always indicative of future results. Evaluate the company's current situation. Typical dividends with higher percentages are safe in a recession and tend to discontinue their dividends when the times are tough. Example of this are REITs. REITs are IRS regulated. REITs must pay out 90% of their taxable profits to shareholders in the form of dividends, thus making it harder to save cash for a rainy day without collateralizing assets or selling their own assets/shares when times are tough. They tend to cut dividends during hard times. However, when the stock drops, you can scoop up an appetizing deal, and when the REIT returns to a normal price, you'll have an insane dividend percentages per share, typically high double digits. My personal favorite REITs to invest during the COVID bear market are Maine, EFC, and EPR. This is not financial advice. Next up, we have the healthcare sector. A sector that has proven to be recession resilient. After all, health is wealth, right? Pharmaceuticals. Companies that produce essential medicines tend to stay strong. They are different from biotech stocks, which are usually hit or miss. These companies produce proven drugs that work and have customers asking for refills. Johnson & Johnson is a good stock example. Health insurance. People provide health insurance even more during tough times, making health insurance providers resilient. Insurance is one of the staples in every individual's budget sheet. Even when the economy is down, they'll still be paying their insurance bill. These are the main sectors to pick during a recession or preparing for an upcoming recession. Consumer goods stocks, utilities, dividend stocks, and healthcare stocks. Personally, dividend stocks are my favorite. If you appreciate all the hard work into researching the video and putting it into a digestible watch, please hit the like button and consider subscribing. And as always, thanks for watching. See you in the next video, and happy investing.